What's up, team? Hope everyone's doing well. Today I'm bringing you another weekly analysis video on my entire outlook on the markets for this week. Within this video, which will be the free video on YouTube, I'm going to run through the open positions that I've got. I'm going to show you 3 positions that we're looking to enter. So 3 free signals basically is what I'm going to do. So nothing really too much exciting has gone off as I've been updating in my Discord. It's currently the 15th of January today. So how we basically play January from a swing trading perspective, but even more importantly from a day and an intraday perspective, is this is the week that we're going to start seeing volatility and movement come back into the markets. So this is the week that volume is going to come back in the markets, should I say. So within the first couple weeks of January, prices a little bit, nothing too much has been going on. We've been managing to profit from an intraday perspective just on the smaller moves in the market, but we've really been waiting on a lot of key news to come out this month, as it will. So the NFP data is really important, which came out within that first week, which we were waiting on, and then all the CPI data is really important as well that comes out this week, this month. So the significance of news in January compared to any other month is that basically it's going to set a precedent for the rest of the year, or even just the next few months. But what it does is it tells us about last year and the year-on-year figures and things like that. So where we've had trends in the market, we might see some certain reversals, whereas our whole strategy that we trade from a swing trading perspective is trend continuation. So we don't want to blindly enter based off of technicals, assuming that price is going to continue, which is what our technical setup allows us to do. If there's going to be major fundamental news coming out within this month, early on in this month, which is basically going to tell us that price may be improving where it's been bad before, or price may be a lot weaker on certain currencies where it was bad before. So I've been really passive this month, as you'll have noticed. I've not really done anything too much. A lot of my TPs got hit at the end of last year, which was really good because it meant that we're kind of fresh coming into the new year. Looking at my past results, January is always a month of reversals, and you can backtest this with the strategies that a lot of things change in January, where a lot of trends, something about the psychological aspect of just turning a new leaf for the year. A lot of trends that are in a strong uptrend might have a retracement, or a lot of trends that are in a strong downtrend might have a retracement upwards and a correction. So I've kind of had my foot off of the gas so far, which is completely normal. It's completely fine. You look at most professional traders, then they know when to trade and they know when not to trade. And periods like this, especially with my strategy being a trend continuation strategy, it's very important that we don't overtrade in periods that it makes sense not to trade. So we've not really done too much. All of the positions that are open are risk-free. What that means is their stop loss, which was originally at the stop loss position, is now at the entry point. So worst case scenario, price reverses and we do have a trend continuation, a trend reversal, we don't lose anything because our stop losses are at break even. So all of our positions are risk free. I've just got 4 active trades, which you can see there, and we're just going to let these play out. So there's not really been too much movement since last week. So Aussie Swiss is a 3.4R. We're just kind of letting this play out. This one we had 1 touch there, 2 touch there. This was our 3rd touch, which we looked for in line with this EMA. The reason we used this EMA is because we saw it being used previously as resistance. So we had this very clear instance there, this instance there. Price did act as resistance and then momentarily break above it for a week. But the fact that price couldn't hold above and then dipped below was quite a good sign for us. And then we had this resistance there. We also noticed it previously before this trend being tapped several times. So here it was tapped and bounced back off. Here it was tapped and bounced up. So we have a lot of indication that this EMA on this time frame is powerful and has held respect in the past. So we look for it to be used again. Simply just problem solving here. We had the Fibonacci retracement from this high to this low. We look for our key level of 78.6 and the 71, that sort of region between there. We got a nice key price level, so where it was used as support here, it was used as resistance there, and resistance there, and lo and behold, it was used as resistance in line with our trend, in line with our EMA, in line with our fib zone that we looked for. So that's the basics of my technical setup, is when we've got the EMA that's been used as support or resistance previously. We've got the third touch of a trend line that coincides with that. So here we're basically taking advantage of Elliott waves, where we use this, which is the E wave. So it might not be the prettiest picture, but this is your A, this is your B, this is your C, this is your D, and what we're looking for is this E wave to essentially bring us profit from our entry to our first and second take profit. So that's why we look for the third touch. Everything else in confluence basically gives us a high probability that once price reaches this level, it's more likely to push to the downside than it is to hit our stop loss. Then what we do from there is apply proper risk management, allocate 1% per trade idea. So I'll not actually get into that in the free video because that might go over a lot of people's heads, but let's just say we risk 1% per trade. All of our confluences are in alignment. Once price reaches this level or approaches where we want to be, we start looking for some candlestick rejections as price gets to the level. So for example, we had this huge shooting star. We had another shooting star there. We had another shooting star there. This gave us significant rejection from our zone. So we set a sell limit at the 0.585 level. So it's a nice round number, multiple of 25 pips. And it was previously held with a lot of high regard in the market beforehand. So that gave us a high conviction to place our sell limit there. Just delete those, and then you can see as soon as price literally perfectly tapped that level, a lot of institutional money and a lot of order flow came into the market and pushed price to the downside. Now we're simply just waiting on price to hit our first and second take profits. I believe, if my calculations are right, if I hit TP1 on this, I pass a funded challenge, which is good. So I'm just staying patient on that one, not opening any more positions, just letting it play out. So that should be pretty good if this pushes to the downside. I've got a little feeling that because of this sort of curved movement here, we've lost a little bit of momentum coming into the new year. We might actually see price push up and re-follow this trend again before it pushes back to the downside. So we'll just have to see what happens with that one, but we stay patient. Don't try not to focus on it too much. Once you've opened the position, you just let it run basically and just follow your strategy. Aussie JPY, very similar setup in terms of having one touch, two touch, third touch. We've got the EMA that was held as support previously, so we look for that again. We took our fib level from this low to this high, and set our entry actually below the 78.6 on this one. I was waiting for this triple bottom there, which you can see. I was waiting for that triple bottom to get liquidated, so I set my I set my limits at the 93.5 level on this sort of round number there. Price did actually wick through it quite significantly, but within that same candlestick, it managed to push back up and close higher. This trade was taken on the 2nd of October 2023. At that point, I was using 3 take profits, so TP1, TP2, TP3. I've now decided in 2024, in order to keep up with the dynamic markets, that I'm only going to use 2 take profits going forward. So that's why this trade looks a little different. You can see that if I did use 2 take profits on this trade, I would have basically cashed out 4.7% so much sooner than leaving that last 25% of the position running for TP3. Within that time, price came all the way back down, nearly stopped us out at break even, and looks like it's just pushing to the upside now. But that's why this trade looks a little different, because I used to use 3 TPs versus how I've analysed the performance in 2023. It looks like price is basically hitting TP2 and then taking forever to come back and hit TP3. So I'd rather cash in everything at TP2, have that money in the balance to then place on new trades, rather than just racking up swap fees and sort of opportunity cost for what we could just trade with the profits we cash out at TP2 instead of waiting for TP3. So this one, we've just got a last position running for TP3. The 3-day EMA is held really strong as support. You can see this whole time, it's just every time it comes back down to that 3-day EMA, it gets tapped back up, fails to really close beneath it for 2 straight candlesticks. So this might happen again, maybe like this. So here we could look for a re-entry, but I'll update on that, where we have 1 touch, 2 touch, 3rd touch. The EMA would be coming in. Then from there, we've just got to line up the fib levels, line up previous structure in the market, and see where else we can take that. So this is a position that we might look to re-enter on, given that everything else goes well, basically. Swiss JPY. This one recently hit our TP1 and made about 2.5 R. So now that I'm using 50%, that made 1.25%. This was similar. We had 1 touch, 2 touch, 3rd touch. We had the EMA, which was sort of between the 2-day. So that 2-day was used as support. And also the 3-day was holding really strong and sort of lined up better. At the time, there was huge news coming out from the Bank of Japan, which is why all the yen pairs suffered a really steep loss after such a huge year. So we knew that was happening. We made sure our positions were sort of in line, ready to take a deep pullback rather than what we'd normally look for. So the entry was taken from the 78.6 fib level, which was the 164 psychological level. I believe we're in new territory on Swiss JPY now, so we don't really have too much previous price action to go off of. But you kind of know 164, that's going to be a huge psychological level in the markets. We did have previous resistance there, which sort of shows that when price came to this level, it was having some sort of order flow executed back into the market. So we used that here as support, which happened when price pushed down, held a little bit of drawdown, but we had sensible stops on there, especially if it being a yen pair. Now we're just sort of waiting for that last little push upwards to cash out 3.2 R from this trade. New Zealand JPY on the 3-day again. This was very similar to AJ. So New Zealand JPY, this position here was very similar to when we entered here. Very similar setup. Again, price pushed up, hit first and second take profits. It's now came back and we're just waiting for it to come back up and hit that 3rd and final take profit. Within that time, when the Bank of Japan, released that news data towards the end of last year, that steep drop in the sort of yen pairs, we were able to catch an entry from on this position. We only placed 0.5% on this because it was halfway through December. So it's not the best time to be entering new trades, but we did anyway. We entered with 0.5%. And you can sort of see how perfect the level was, 88, that we called out. Price failed to close beneath that. It did wick beneath it a few times, but it failed to close beneath. Perfectly in line with 1 touch, 2 touch, 3rd touch. We had the fib level from this low to this high, which was in between our zones of 71 and 78.6. You can see here perfectly that this was a previous key structure in the market where price reacted. A lot of order flow came back in the market and pushed price well away. So that's exactly what we look for to happen again when price had this steep drop, and we're saying it's going to push all the way to the upside from there. So again, with this one, we have a TP3 position that we're holding for 4.2R, and then we've got a stacked position that is stop loss to break even. We're now just waiting for that one to push up to TP1 and TP2. I've just kind of reset my alert there. I'll come back to that later. Right, so that's all of the open positions that I've gone over. This is what we're holding at the moment. We're pretty light, which is good because I'm expecting a lot of volume to get pumped back into the markets this week. So I'd rather not have a load of positions exposed for some key news that's coming out. So it's good that everything's risk-free. Within this next week, we should be looking for a lot more positions to start getting open. So I'll go over 3 positions that I'm looking at entering within the next week. They might not enter within the next week exactly, but here's sort of what I'm looking at, which aligns with our setup and aligns with our strategy. So first one, we've got CAD Swiss. You can see here, this is the first touch, this is the second touch. We're looking for the 3rd touch of this trend line. This is the daily 50 EMA, which has been used as resistance once, twice, looking for it to get used as resistance again. We've got the fib level from this previous significant high to this previous significant low, and we're looking for the 78.6 and the 71 region to be fulfilled. So you can see that the EMA is lining up nicely with that, the trend line is lining up nicely with that. This also was a previous area of key support where price was sort of reaching and failing to break below. How we're looking for this one to play out is price to sort of come up, test it a little bit, and then come back to the downside. So that's what we're looking at entering at the moment. For now, I just set an alert at the 61.8 level. Once price gets to there, I'll sort of inspect it a little bit more closer to wait for those rejection candlesticks before we get into the trade. Next one is pound Swiss. This one's very similar. We've profited a lot from this in the last year from the downtrend in pound Swiss, expecting that to just carry on with no change. But I guess we'll see what happens this month and how it plays out. We've got the 3-day EMA, which was used very nicely as resistance in the past. Momentarily broke above, but didn't do for so long. Now it's on the underneath of this EMA again. It's looking to just use it as resistance once again. So we have previous resistance multiple times. We're looking for that to line up with this trend line, in line with the fib from this high to this low. Within this zone, we've got previous key structure again. We've got 1 support, 2 support. This was basically a 3rd support. Now that price is underneath, we're expecting price to come back up, test it as resistance again, and come back to the downside. So that's what we're waiting on. Again, we've got alerts at the 61.8. See how that plays out. Last but not least, we've got pound US dollar. Here we've got one touch, which I've used the daily open to line it up better with this EMA, which we can do in swing trading, because in intraday trading that might look weird, because that would just be like, I don't know, like a 15-minute candle or a 1-hour candle. When we're swing trading like this, every sort of candlestick is very significant, because this is a daily open. You know, in intraday trading, this level right here would be very significant to you guys and you'd watch it. But in swing trading, we can use that for a trend line because it's a daily open, like it's a very significant level. So we're using that to sort of play off of this trend line. Again, we're using this daily open to be the previous significant low for this high. What that does is it allows us to use this level as the 71 and 78.6 zone, which was used as previous resistance, support, 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 support. Now we're looking for it again to be used as support from this zone, aligning with the trend line, aligning with the EMA, and then what all we'll do from here is wait for price to show us some sort of candlestick rejections and then push to the upside from there. So one thing I am noting about this pair is that this is a very strong monthly resistance here. So if we take our top down, you can see that those highs, this one there, lines up pretty clean with the level I just showed you. So I'm taking that as a sort of upper boundary. If my take profit 2 was outside of this, I probably wouldn't look to take the trade, just because I've got a monthly level which overrides my daily setup. So in trading and in the charts, the higher the time frame, the higher the conviction. So I don't care if the daily is telling me to buy, because the monthly is telling me to sell. So I'm using this as my sort of upper boundary. And if this carries on playing out, something like this, and I haven't got an entry until maybe this point, and then when I get the entry, my trade's looking like this, I'm not going to take it, because this monthly level is sort of acting as a counter confluence to what I'm doing. You always got to obey the top-down analysis, basically. So that's basically what I'm looking at so far. So there's three positions. If you want to see the rest of the positions that I'm looking at taking and the full analysis of those, come and hop inside the VIP Discord channel, where everyone there gets the full information about what I'm looking at, why I'm looking at it, certain reasons why I'm not entering in certain pairs that might obey these technicals. You know, this isn't pattern trading. It might look like pattern trading where we've just got a set of technical rules and we're obeying them, but there is fundamental reasons why we obey them as well. And then also fundamentals why this all might be true, but something's telling me not to enter the trade, and we give that away in the Discord as well, which is really key. Similar to how I said at the start of the video that we're pretty light on our feet in January and we're not looking to enter too many pairs, it's because now is a time when it doesn't make the most sense to trade, because we're trading trend continuation, and a lot of news comes out in January that might reverse a trade or reverse a trend direction. So it's important to know when your strategy works, and it's important to know when it might not work as well. Sort of play to the best probabilities and play to the best odds that you can, which is pretty much what trading is. It's just an odds game. So you don't just blindly take trades because some lines on a chart tell you to. You take trades because you've got the highest probability that this is going to happen over this. Sometimes it might not win because it's just a probability. But if you look at my track record, I mean, recently, every single video that I've called things out, we've been making money week in, week out. So I've just deleted that December log, but that takes the piss. But here you can see November we made 4%, December we made 13%. January is always pretty slow. If you try force trades in January, you generally lose, so we don't force trades. But excited to see what trades play out and how much profit we make in January. At this point, it's pretty hard for us to lose, because even if all of these trades hit our stop loss, we just cash out at zero. You know, it's risk free. So believe me when I say I know what I'm doing. You can check my track record. You can verify my strategy yourself and sort of back test it. I actually want you to do that. That's the whole point of me teaching you. A lot of people might hate and say, if your strategy works and if you're good at what you're doing, why have you got to show other people? Why do you need to teach other people and get them to pay for a group and all this bollocks? And it's just like, my explanation for that is that trading is like, it's pretty meaningless to society. I mean, even in the sense that we're trading now, we don't even move the markets, guys. We're just speculating the derivatives of these assets. When I'm putting a position on my fucking retail broker on TradingView, on MetaTrader 4, it's not moving any price. So all I'm literally doing is gambling against price going up and down. It's pretty meaningless. It serves no function to society whatsoever. So the reason I'm teaching is to provide something to society, guys. Like, otherwise what I'm doing doesn't really, help anyone out. So I'm helping you out watching this video by teaching you how to do this and make money from this yourself. So that's how I would answer that question that I've been getting quite a lot recently. You can test the strategy yourself. You can literally join the Discord and see the proof of the strategy, as well as just going back on each video and seeing, I'm calling this position out. Guess what? It entered and played out how I said it would. So Q4 2023 of what I started recording for the public, we made 17%. So that might not sound like a lot if you've only got £1,000, but just wait till you're passing like 200k, 400k, 600k, £1 million funding challenges. You've got £1 million in funded capital. You've just made 17%. Guess what? You just made 170 grand in 2 months. So there you go. Like that's the goals that you guys should be having with your trading. Don't look at this as, oh, well, I'm only putting £500 on, so it's not worth it. Think big. There's literally funding challenges that if you were following my analysis, you could have passed by now. You could have passed 2 of them by now if you got the rapid challenge. So yeah, that's a little bit of a rant over. But yeah, basically get yourself inside the Discord. I'm giving away so much value at this time. Once it starts filling up, I think we've got like 300 members in there now. I think once it hits 400, I might just up the VIP price, because it is a super cheap price, I'll be honest. I made it super cheap because I was just starting. I've been doing this for a couple months now. People should start to see that I know my shit and that I'm not one of these bullshit fucking fake gurus. I'll literally show you what I'm looking at week in, week out. You can verify it yourself and go back, see what I'm doing. So yeah, I'll leave you with that one. Here's 3 positions that you can watch play out. It doesn't necessarily mean that I'm going to enter them just because I've posted this. You'll have to see once price gets to this point. Do I think it's still a setup based on how it reacts to those zones that I've pointed out, or based on how the EMA moves along with the trend line? Because here's a dynamic trend line and here's a static trend line. So you kind of have to see, as price develops, how does the dynamic trend line fit with your analysis as time goes on, etc., etc. So yeah, make sure to check out the tutorial videos that I'm posting. Make sure to get yourself inside the Discord to see the insights of my strategy and how to use it and how when not to use it. And until then, I'll see you next time.